Tesla stock is currently down about 1% on the day today. And we actually had some really good news. Morgan Stanley put out a bull case scenario in 2025 of $800 per share, which kind of coincides with some of the positioning that we are seeing today in the options market. I will share that with you in this video. You also have bad NVIDIA Blackwell chip news. That could be the biggest driving factor of the day today, pushing down big tech. We have 10-year treasury yields hitting a new almost 2-year high. That's not great. And there are some other things that could be negatively affecting our markets, and we will discuss them here in this video. But first, I want to start with this. I shared this post from Mike Investing on X with you yesterday. He says Tesla will outperform every stock in the US stock market this year. With a massive consolidation period, Tesla had followed by a breakout is simply just the beginning. Major catalysts are incoming, and the whales are prepared and loaded $800 plus calls for end of year. Now, when I seen some of these options trades today that I'm going to show you here in just a second, it instantly reminded me of that post and the positioning around the $800 strike for the next 12 months or so. Take a look at these two trades. January 16th, 2026, $810 call worth $1.88 million. You have another one here, a January 16th, 2026 $800 call worth $1.93 million. So put together almost $4 million in options trades that expire in almost exactly 12 months that are out the money over 150% or so. I stand corrected. From current levels, you would need about 104% gain to make money, or at least just to break even on these options. Factoring in the break even, you would need about 110 to 115% rise in Tesla stock in the next 12 months to actually make money on those options. And they just put $4 million on that bet. Not that, you just need the stock to go up to make money, but you need the stock to go up over 100% to make money. That's an insanely bullish bet on Tesla. Now, total option activity so far on the day today, you have seen 71 different trades totaling $42.15 million with a positive order value of 61%. We don't have much of a change in the short position today. It looks like you got about 3,500 shares that are being sold short on net today. You have borrowed shares of 89,800 and you have return shares of 86,230. So very, I would say, uneventful day in the short position. Now, even in the options, it's been a pretty slow day as well. And I think a lot of people on Wall Street are just waiting to see what this inflation data is going to look like coming tomorrow with PPI and then CPI on Wednesday. Now, also big news today for Tesla. Morgan Stanley's Adam Jonas has raised his Tesla price target to $430 from $400 on robotaxi and shared mobility bullishness. Tesla remains a top pick for them with their bull case price target that is at $800. This is over the next 12 months. According to the note from Adam Jonas, he says that Tesla's unique combination of expertise in data collection, robotics, energy storage, AI, and compute infrastructure has positioned it as a leader in the emerging autonomous mobility market. The analyst emphasized the role of Tesla Mobility, the company's autonomous rideshare division, which is valued at $90 per share in the revised sum of the parts SOTP model. The mobility fleet is projected to grow to 7.5 million vehicles by 2040 with an estimated revenue of $1.46 per mile and 29% EBITDA margin. Morgan Stanley also highlighted the increasing significance of Tesla's network services, encompassing recurring revenue streams such as full self-driving, supercharging, and software upgrades. This segment is expected to contribute approximately 1/3 of Tesla's total EBITDA by 2030, rising to nearly 60% by 2040. The network services segment is now valued at $168 per share, reflecting its growing importance to Tesla's business model. The analyst anticipates Tesla's unsupervised autonomous vehicle fleet to debut in a city setting by 2026. So they're not even expecting that Tesla will be unsupervised or really even launch robotaxi in 2025. They say that's 2026. And they still have an $800 price target on Tesla over the next 12 months. Adam Jonas says, however, they do not project widespread deployment of autonomous vehicles in their Tesla mobility forecast until after 2030. Wait, what? We could get to $800 per share without a widespread deployment of autonomous vehicles? I don't know how likely that is personally, but I think that projection is way off. I mean, I think we're going to get the rollout in 2025 with a larger ramp in 2026 and an even larger ramp in 2027. They go on to say, while self-driving policies might undergo reassessment at a national level under the incoming administration, Tesla still faces significant hurdles in overcoming challenges related to technology, testing, and permitting for near-term commercialization, analyst added. The updated bull case of $800 per share assumes a fleet size of 12 million vehicles by 2040, generating $1.50 per mile in revenue with a 45% EBITDA margin. This scenario envisions robust international expansion and greater pricing power. On the other hand, Morgan Stanley's bear case valuation of $200 per share reflects potential headwinds such as tighter regulations and slower geographic adoption. In the news today, Porsche reported a 3% decline in global sales for 2024, with total deliveries amounting to 310,718 vehicles. Sales in Germany rose 11% to 35,858 units, offsetting some of the impact of a sharp 28% drop in China. Customers who ordered a Tesla Model Y in the Philippines will automatically get the upgraded Juniper model when deliveries start, says Tesla. And it is official, the Tesla Model Y yet again became the best-selling car in China in 2024. And Tesla has officially overtaken Audi in global car sales for the first time ever. Audi sold 1.67 million vehicles in 2024, down 12% year over year, whereas Tesla sold 1.79 million in 2024. Deliveries of Audi's fully electric models declined 8% globally to around 164,000 units. Now, as you can see, the Russell 2000 is down almost 1%, but the NASDAQ is taking it the hardest, down over 1.5%. S&P is down 0.79%, and the Dow is actually slightly in the green today. And the VIX is up over 5.5% to 20.64. So markets just keep getting more fearful and more fearful and more fearful. And it seems like the selling pressure is just not ending. Some of the selling today in big tech is probably due to this. NVIDIA faces Blackwell delays due to overheating and glitches, with major customers like Microsoft and Meta cutting orders, potentially impacting its $150 billion 2025 data center revenue target. Now, this news is from The Information. Sometimes they're pretty inaccurate. This could be some of the old news that we already kind of knew about, but we haven't heard anything from NVIDIA. And until we hear something from NVIDIA, people are just going to take the news for what it is. And this is really negatively affecting your big tech names today. You can see Apple's down 2.5%, Meta's down 2.5%, Amazon's down 1%, Microsoft down 1%, Google's down 1.5%, Nvidia's down almost 3.5%, and Netflix down 0.5%. And also Tesla down about 1.75%. Putting that into context, Tesla's actually not doing too bad compared to some of your other big tech peers. And we did get some pretty weird data as well today from the New York Fed. December 3-year ahead expected inflation came in at 3% versus 2.6% in November. But the 5-year ahead expected inflation at 2.7% in December versus 2.9% in November. So short term, it looks like, people are expecting a fair bit of inflation. But 5 years ahead, inflation expectations actually fell. That's pretty remarkable. And in fact, consumer inflation expectations here, this is the data that markets reacted to, came in again at 3%. Previous month was 3%. The forecast was actually 3.1%. So we actually came in lower than expected here, which is pretty remarkable considering 10-year treasury yields are moving higher again today, moving up by almost 3 basis points to 4.80%. This is a new 52-week high. So on top of the NVIDIA rumor news, I'm not even going to call it legit or real news, rumor news, you're also getting a 52-week high in treasuries heading into a 2-day stretch of inflation reports. That has people pretty nervous. You can also see via the New York Fed survey data that came out today, December year-ahead expected food prices increased. December year-ahead expected gas prices are down, the lowest since September of 2022, or at least the expectations. And households' views on personal finance situation improved in December. So, it's not really bad news. Now, some people say the rise in 10-year treasury yields, especially on a day like today, really doesn't have to do with the inflation expectation data that came in today, which was better than expected pretty much across the board. It's really just a buyer's strike in the treasury market, meaning we just don't have many buyers right now. And that makes sense. Who wants to buy 10-year treasuries or any part of the curve right before you get CPI data when it's, never been more important than it is now? It makes sense why people do not want to buy 10-year treasury yields on a day like today, but that does mean tomorrow's data is going to be even more important than we maybe thought it would be. Even PPI. PPI is producer price index or producer price inflation. It is companies' cost. If company costs go up, they tend to pass those costs on to consumers. And that's why PPI could be important tomorrow, or at least it will be important tomorrow for the treasury market, at least. PPI month over month on a headline basis is expected to actually decelerate from 0.4% last month down to 0.3%. Core PPI month over month is expected to rise a bit from 0.2% last month to 0.3%. And core year over year is expected to rise as well from 3.4% last month to 3.7%. Now, Google Trends data today for the Tesla lineup looks pretty good. Cybertruck's search trend activity is falling. I think a lot of this had to do with the Las Vegas bombing that really sent this number up to 100. It's falling now. The Model Y has recently spiked as well from 22 up to 36, now back down to 34. So overall, looks really good. And look at this. For the first time in I don't even know how long, CNN's Fear and Greed Index is in extreme fear, sitting at 25 today. Market momentum is in extreme fear. Stock price strength, extreme fear. Stock price breadth, extreme fear. Put and call options, extreme fear. Market volatility is neutral. Safe haven demand, extreme fear. And junk bond demand in greed. I haven't seen this negative in a long time. The put and call options here, the 5-day average for the put and call ratio, has not been in extreme fear in quite a while. Now, one of my favorite things to look at, it's crazy, okay? It's the percent of stocks trading above their 50-day moving average. Currently, hit a low today of 25%. You're up again to 26.5%. This is the lowest level you have been at in a year, okay? If you look at the last 5 years, the last time you were this low was October of 2023. Okay, this is when you had a 10% drawdown. Markets just over the course of like 2 months fell, and eventually that was a great buying opportunity. Take a look at the chart. October 2023, a lot of people were nervous around this time, right? From July until October, you kind of just grinded lower. Okay, with some bear market, bounces in between there. If you want to look beyond October 2023, the last time you were this low was September of 2022. And that's real nasty. September of 2022 was this final drop that we've seen. You ended up bottoming in early October. This is the last time beyond 2023's October dip that we were this bearish or this negative, or maybe that's not the best way to put it, when we had this many stocks in a decline. And at this point, the S&P was down well over 20% from its previous high. You're down about 26.5% from all-time highs. Normally, when you get this bearish, my point is, when you get this bearish, normally you want to be buying markets, not selling, not shorting, or any of that. Same is true with the AI Investor Sentiment Survey. Again, bullish investors at 34.7% and bearish investors at 37.4%. 3% more bears than bulls normally is a good buying signal, not a good selling signal. And 28% of investors are neutral. So we will talk about all of this a little bit more in depth in the next video and what to expect heading into PPI coming tomorrow, why PPI could be such an important catalyst. And at the time of recording this video, Tesla is down 0.85%, so still a red day, at least so far, but you're back above this trend line. Okay, this trend line's important. We've been finding support here for the last, prior 3 trading days or so, and even really over the past week or two, you've found support of this trend line. It looks like we want to hold support here into the end of the day, or at least that's what's happening today. So that's a good sign. Tesla's RSI is at 47.84, so below the neutral level. And you can see the MACD line is continuing to fall. It really looks like it might go negative here. MACD line at 5.68, signal line at 14.48. So not looking too great there also. Ladies and gentlemen, let me know what you think about this information down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.